Today, market participants have entered the new trading week, assessing economic growth prospects of the European Union countries and mulling over other fundamental events. Among them is the European Union's decision to ban coal imports from Russia, which instantly led to a rise in emergency prices, including oil. As it can be seen on the trading chart, this only helped oil prices make a slight rebound from the psychological mark of $100 per barrel. However, oil returned to this level when the session opened. And this is partly due to the fact that the very embargo on Russian coal will come into force only in August. The main reason is the worsening epidemiological situation in China, which will inevitably reduce crude demand. Thus, the asset is expected to remain under pressure until the things in this regard change. The downtrend will most likely resume if the price fixes below the level of 98.50 on the forward chart. Until then, the market will continue to fluctuate. Oddly enough, the new package of sanctions adopted by the European Union against Russia poses a serious threat to both the European and global economies. The prospects of a real energy shortages could bring the entire world economy to a halt. Meanwhile, gold reacted to a possible global energy crunch by overcoming the mark of $1,940 per troy ounce. From a technical point of view, the yellow metal finally broke out of a tight sideways range, in which it had drifted for 3 weeks. However, gold may well resume its range-bound trading. Something similar happened earlier, but after a while, the price returned to the range of $1,920 and $1,940 per troy ounce. Thus, the metal may re-enter a period of stagnation that has been lasting for almost a whole month. At the same time, it's not clear what can drive the market. The decision of the European Union to impose new sanctions on Russia also hit the Russian currency. The dollar-ruble pair kicked off the new trading week with a gap, with the ruble having jumped above 80. In fact, there are first signs of a correction as the Russian currency is at a risk of overheating due to its rally over 3.5 weeks. As expected, the ruble was wound down by an embargo on a coal from Russia. Besides, its decline can be attributed to the fact that its previous gains were too steep and impressive. So a local correction was necessary for the market. Thus, a ban on Russian coal was the only pretext for an upward rebound in the quotes. However, it's too early to say that this is just a temporary phenomenon and the US dollar will return to the level of 75 rubles soon. The situation with the coal is somewhat more complicated than that with the oil and gas. It will not be so easy for Russian companies to find new coal buyers. China, which seems to be the most promising energy buyers, has been pursuing a policy of reducing its coal consumption for a year. So the European Union's ban on coal imports from Russia may result in tangible financial losses. In addition, this decision has increased the likelihood that the region could impose similar measures regarding Russian oil and gas imports in the foreseeable future. This in turn poses downside risks for the Russian currency. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.